the United States has just issued a stark warning to the entire world. Treasury Secretary Scott Bessent announced a new rule that could shake the global economy. From now on, any bank, no matter where it is located, risks being completely cut off from the American financial system if it accepts Chinese yuan for Iranian oil. That means no access to US dollars, no access to the SWIFT system, and no transactions with the United States at all. This is a serious move. Iran is currently exporting more than 1.5 million barrels of oil per day, most of it sold in Chinese yuan, because nearly all of it is purchased by China. This arrangement is already being used by countries in Africa, Asia, the Middle East, and even some European banks. In effect, dozens of countries and hundreds of banks now face sanctions simply for settling trades in yuan instead of dollars. And the timing of this threat couldn't be worse. The US economy is unstable, and Washington is in the middle of sensitive trade negotiations with China. Beijing has yet to make concessions, and instead of seeking compromise, Washington is applying pressure. But will China yield, or will Xi Jinping strike back hard? If Beijing walks away from the negotiations, things could escalate quickly. What if China starts dumping US bonds en masse, or targets American companies directly? The US may have just initiated a financial war, and no one knows how it will end or how much damage it could cause. This could mark the beginning of a global economic conflict with catastrophic consequences. So let's break it down. Recently, the US Treasury imposed sanctions on more than 30 individuals and companies involved in helping Iran secretly sell oil and process payments. These operations don't just exist in Iran, they're also active in the United Arab Emirates, Turkey, and even China. These networks are critical to Iran's ability to survive economically under sanctions. But here's what's surprising. The US is no longer just targeting Iran. Anyone who works with Iran, even if the transactions aren't in US dollars, is now a potential target. Back in April, American officials flew to Hong Kong not to negotiate, but to deliver an ultimatum. They told local banks in no uncertain terms, if you use yuan to pay for Iranian oil, you'll lose access to the US financial system. No hints, no diplomacy, just a direct order from Washington. Obey US laws or face total isolation. So how did we get to this point, where US laws apply beyond US borders, even to deals conducted in other currencies? America's dominance over global trade is nothing new, but now, in financial hubs like Hong Kong, Washington is taking a hard line. If you help Iran, whether in yuan, euros, or even gold, you will be punished. This is what extraterritorial sanctions look like. The US increasingly enforces laws that apply across the globe. Even if a company has no direct links to the US, it's enough that it wants to use the dollar or do business with American banks. And today, no major bank can function without the dollar. The same goes for the SWIFT system. Without it, international payments grind to a halt. This is what gives the US the power to impose its rules worldwide regardless of borders. Washington already exercised this power in 2023 when it sanctioned 9 companies from Singapore and Malaysia, as well as a broker from Hong Kong, simply for deals involving Iranian oil. Local authorities didn't even have a chance to intervene. It's starting to look more like an empire imposing its own laws on foreign nations. So what is this really? A fight for justice? Or a full-blown financial dictatorship? And the key question, are other countries actually willing to comply? China and Iran are not sitting idle. Since 2021, Beijing has been signing long-term contracts to buy Iranian oil at steep discounts. The main condition, payment exclusively in yuan, no US dollars involved. This is a direct challenge to the dollar-based financial system. The more countries that buy oil in yuan, the less they depend on the dollar, and the fewer levers of pressure the United States has. So when Washington starts punishing banks just for using yuan in transactions with Iran, this isn't just about Iran anymore. It's about halting the rise of an alternative financial system. And here's the central question. Are the United States really fighting terrorism, or are they just trying to maintain their monopoly on global finance? The US has decided that targeting banks alone isn't enough. Now sanctions are hitting oil tankers too, especially those that belong to Iran's so-called shadow fleet. These are ships without official flags or with falsified registrations that secretly transport oil, mostly to China. In April, the US sanctioned Chinese refiner Shandong Shengxing for purchasing over $1 billion worth of Iranian oil. The message was clear: if you buy sanctioned oil, be prepared for financial isolation. But the issue now goes far beyond Iran. The US is demanding that even foreign companies follow its sanctions policies or lose access to the dollar and global markets. But what happens if countries like China and India decide to say, enough? What if they create their own systems, completely independent of Washington? In that case, US actions might not reinforce American dominance. They could accelerate a global split. These measures don't just hurt companies, they strain the entire global economy. Oil prices surged sharply after the US and Israel struck Iranian nuclear facilities. It was a major military operation, and it instantly sparked panic on global energy markets. On Monday, Brent crude jumped to $78 per barrel, while American WTI rose to $75. That spike is a major red flag for the world. Iran holds one of the largest oil reserves globally and plays a critical role in global supply. If Tehran retaliates by closing the Strait of Hormuz, the consequences could be catastrophic. More than 20% of the world's oil passes through this narrow waterway. Blocking it could crash markets and trigger a full-blown energy crisis. And this is no longer just a hypothetical. The escalation is already pushing up fuel prices, driving up the cost of goods, and accelerating inflation. What's at stake is no longer just geopolitics. It's the stability of the global economy itself. If the Strait of Hormuz is blocked, oil prices could easily soar past $100 per barrel, a shock the global economy might not recover from. What's remarkable is how China is turning this global crisis into an opportunity. Just in March, Chinese companies and investors conducted over 54% of all foreign trade in Yuan, totaling around $725 billion. That's a record. And more importantly, it's not a coincidence. The yuan is now seriously competing with the dollar in global trade. China has long been moving deliberately toward making the yuan a global currency. The People's Bank of China is pressuring its banks and state-owned enterprises to carry out international deals in yuan. Chinese banks are issuing more overseas loans, also in yuan, and participants in major projects are being directly encouraged to drop the dollar. Beijing is acting gradually but deliberately, weaving its currency into the fabric of the global economy step by step. And this campaign is already paying off. It could reshape the entire global financial system. Why does this matter? Because today, the vast majority of international trade is still tied to the US dollar. But Washington is increasingly using that dominance as a political tool, through sanctions, restrictions, and financial controls, punishing countries it disagrees with. As a result, more and more nations are worried. No one wants to wake up one day and find themselves cut off from the dollar system just for being at odds with the US. So the question becomes inevitable: is there an alternative? And for many, that alternative is now the Chinese yuan. China sees this as a historic opportunity. A growing number of countries are already paying in yuan for oil, technology, and construction materials. In return, they get loans, infrastructure, and development support through the Belt and Road Initiative. But there's one condition: use the yuan. And the more countries adopt it, the stronger the currency becomes. But China isn't stopping there. It's developing a digital yuan and already testing it in foreign markets. This system could completely transform international payments, making them faster, more transparent, and fully controlled by Beijing. If it succeeds, China could offer the world a new financial platform, one without the dollar and without dependence on the United States. The global financial system once dominated by Washington is starting to crack. China is building its own network, its own currency, its own rules, its own settlement system, all outside the dollar and outside American jurisdiction. Already, countries in Africa and Latin America are opening accounts in Chinese banks to trade in yuan. Others are signing agreements to do business without using the dollar at all. Even central banks are quietly adding yuan to their reserves. They've seen how quickly the US can freeze assets, block humanitarian aid, or sanction entire industries. They've seen how the rules can change overnight without explanation and without the right to appeal. Now they're preparing for a new world where America is no longer the sole authority setting the rules of the game. But the most powerful changes in the global economy today are happening, of course, in the oil market. For decades, oil was priced and sold almost exclusively in US dollars. This system, known as petrodollars since the 1970s, formed the foundation of America's global influence. But now, that foundation is starting to crack. As mentioned, China is already buying Iranian oil in Yuan, but it's not just about Iran. Beijing has signed long-term oil contracts with Saudi Arabia, Russia, and Venezuela, and all of them will be settled in Yuan. Back in 2023, Riyadh began discussing mechanisms for settling oil trades in the Chinese currency. And this is no longer just theoretical, it's a new reality. A futures exchange in Shanghai is now operating with oil contracts priced in Yuan, where buyers and sellers can bypass the dollar entirely. More and more countries are introducing dual pricing, in both dollars and yuan, depending on who's buying. And this means that if oil can be freely traded in yuan, demand for the dollar will start to fall, along with Washington's influence, which once seemed unshakable. China has built the entire infrastructure needed, from payment systems and trade agreements to its own settlement networks, and more countries are starting to use them. Each time the US imposes sanctions on companies' ships or entire nations, the world is watching, and each time it draws the same conclusion. Dollar dependence is a vulnerability. It means your reserves, your assets, and even your supply chains can be frozen at the snap of Washington's fingers. But power like that can't be wielded forever. It breeds resentment, and resentment turns into resistance. China, with its expanding yuan-based settlement system, is quietly launching a powerful revolution. Iran, Russia, and dozens of countries across the global south are no longer waiting for US approval. They're already building an alternative financial reality, where America is no longer the one dictating the rules. So be sure to subscribe and turn on notifications to keep up with all the latest developments. Thanks for watching, and see you in the next video.